Welcome to the Big Four Accounting Firms podcast, brought to you by big4accountingfirms.com and the Big Four Accounting Firms YouTube channel. In today's podcast, I wanted to discuss some pretty big news out of the UK. The Big Four accounting firms, PwC, Deloitte, KPMG, and EY must split up in the UK due to recent accounting scandals. And they have until June 2024 to separate their audit and consulting businesses in the UK. And it's the Financial Reporting Council in the UK that's the governing body that is calling for the breakup of the Big Four in the UK. Wirecard is just one of the latest accounting scandals that is prompting this action in the UK, where supposedly more than $2 billion went missing through accounting fraud. Now, why is the FRC calling for this? This isn't the first time this has happened. Something similar to this happened after Enron collapsed in the United States. And after Enron and Sarbanes-Oxley, the Big Four got rid of their consulting arms to appear independent from their audit clients. And Deloitte was the only firm to keep their consulting practice after that. But ultimately, the Big Four ended up rebuilding their consulting firms again once focus from regulatory agencies died down. Now they're supposed to dismantle them in the UK, and they're supposed to do this again. It is still unclear how this will work, though. And the Big Four have until October of 2020 to come up with an operational way to separate their audit firms from the consulting firm. And I'm sure the Big Four will come up with a structure where they can keep the profit from their consulting firms and just rebrand them or put them in a separate building, have some kind of small control that appeases regulators but still gives them all of the benefit. And you can trust that the Big Four are not going to give up their consulting arms just to appease regulators. They're going to fight this. And another thing this shows is how Europe is different than the US. The UK and Europe in general is more in favor of bigger government and more regulation. The United States has the same number of scandals as Europe, and the dollar amounts are probably even bigger. However, it's just that Europe is more favorable towards regulation. Therefore, they're the ones that are calling for this. In the US, this comes up every now and then, but nothing really happens to it. The accounting firms always slip out of further regulation, probably due to lobbying. And my only fear is that the implementation of this plan will be a nightmare. And again, the regulators are giving the Big Four some time to come up with an operational plan to do so. And I think this is a step in the right direction, but it will not solve the problem. The problem that it's trying to solve is that you have audit firms where the audit partners take consulting ideas to their clients and aren't focused on accounting. However, that's the problem on its face. That's not really the problem. The biggest problem facing Big Four accounting firms is their profit goals for partners. Partners have to have a certain amount of revenue under management in order to stay a partner. And many times the Big Four will promote a partner. They'll promote somebody to partner who isn't ready, and they force them to find new revenue. And if your primary goal is revenue so that you don't lose your job or your big paycheck, then ethics go onto the back burner. Also, you're not going to be looking too hard into the financial statements of your clients. You're just going to be trying to take the next big idea to them so that you can get millions of dollars from them. You're not worried about finding something wrong with their financials. And if you do find something wrong with their financials, you're sure as heck not going to bring it up or push it, because that could mean that you're not going to win a consulting project from them. The Big Four are in a confusing industry. In one sense, they are basically government-run entities. Everything they do as audit firms is regulated. However, they're private entities and they're also profit-driven. And these two ideas of what the Big Four accounting firm are come into conflict consistently. Why would you push back on a client that is in charge of how much you get paid? Why would you say the client that's paying you millions of dollars to do their audit work is about to go out of business? It just doesn't make sense. And many clients also don't like paying for people to count beans or be a bean counter. So they push back on audit fees each year because they feel like auditors should be learning more about them every year and should require less hours to get the same amount of work done. And the way the Big Four accounting firms make up for this is through their consulting work. And even within the Big Four, audit work is seen as boring, monotonous work. It is the work that keeps the lights on, but it is not where the true growth is, and it's not where the growth is going to be in the future. The true growth is in consulting work. The way you stop fraud in accounting and the Big Four is by hiring ethical people. You must also reward ethical behavior. If someone acts with integrity and reports bad behavior, they should be rewarded. Unfortunately, systems aren't in place for that behavior to be rewarded. So fraud in accounting continues to occur, and it will keep occurring. Don't believe me? Wait until you join an accounting firm or an accounting department and try to report unethical behavior. It is extremely hard to report unethical behavior and to get anybody to investigate it or to change the behavior. And I know this from my own personal experiences. The main thing that will come out of this is there's definitely going to be more increased regulation. Obviously, the government is trying to get more and more power over these accounting firms. And to avoid this increased regulation, you're going to have fewer companies that go public. And this means that audit fees are likely to go down as less companies will want to go public to avoid increased regulation. You will see more large companies stay private for longer periods of time. And if you're a private company, you don't need as many financial statements as you do as if you're a public company. So the big firms will again lose more money from audit fees. If you're trying to plan out your career, then your primary focus should be on being ethical. Yes, you should be profit driven because that's part of being in business. But as you can see, if you're profit driven and blind to unethical situations, it can screw up your industry and your business in the long term. And that's something the big four accounting firms have difficulty seeing. And we see this not only in the UK, but in the US as well. But also, if you're going into audit, you have to consider all these regulations that are coming up and all these accounting scandals and whether you want to be a part of that business. Now, you might want to be a part of that business because you really want to be an audit partner for some reason, or maybe one day you might want to be a CFO or CEO. But realize it's going to be an uphill struggle against the negative view of audit right now and the increased regulations. So that's the update for today. Make sure to subscribe to this podcast and to subscribe to our YouTube channel, Big Four Accounting Firms. Thanks for listening.